Have you got a speaker lined up for me, Kate?
Yes, we've got James Bart in the room.
James, can you hear me?
I got you loud and clear, John. Good morning. How are you?
Okay, reading you fives. Meet James Bart, a decorated F-14 Tomcat radar intercept officer, Top Gun graduate, and combat strike lead. Bart is a chartered market technician, commodity trading advisor, director of learning at CMTI, and level 3 instructor for Market Technician Association Series 3, 63, and 64. He's a graduate of the United States Naval Academy with a BS in mathematics. One of his many titles, he's also the proud husband and father of 4 living in sunny San Diego. So, James, I got to ask you, have you seen the new Top Gun movie?
I did, John. I knew that was going to come up. I did. I actually fell asleep in it. So, yeah.
I fell asleep during the romantic, the love sections.
I was out for about an hour, to be honest with you. But
I don't know. When I was at Miramar, they didn't have all these gorgeous women just hanging around with nothing to do.
Same here. Same here. I'm actually about 2
You didn't
miles
see
north
that
of
either, did you?
No, I didn't. So, but the flying scenes were really good. I'll just leave it at that. How's that?
Well, that's because they were done by real Blue Angels.
Yeah, it was pretty amazing flying.
And Tom Cruise was just cut and pasted into the cockpit.
Has a man ever grown old? I mean, that's incredible.
I think it's a miracle of modern surgery as to why he hasn't grown old. But
that's incredible. I certainly have.
Yeah, they moved it. The real Top Gun left Miramar in 1996.
Yeah.
I
went to Top Gun and Fallon.
Yeah, Fallon is not as beautiful or exciting as Miramar, for sure.
A little different for sure.
I would say. Okay, well, you have until 5 minutes before the hour, and then we'll start giving away our $100,000 worth of prizes for the week, and then we'll take things over and introduce the next speaker. How's Matt doing, by the way?
He's doing great. He is full of energy, and boy, stand by. He's on a roll right now. So he's doing great. Yeah. Okay. Oh yeah. Wiz is
okay. Well, I will hand over the floor to you and mute myself, and I'll be listening in.
All right. I appreciate it, John, and thanks, Kate. Welcome everybody. Just give me 2 seconds to get this this puppy signed up. First off, I do have a little bit of bandwidth issues, so I'm glad that the video doesn't work, and we'll get rocking and rolling. So let's see here. All right. There we go. And John, doing a quick check. Can you guys see my first slide there? Just want to make sure.
Yeah, reading you loud and clear.
All right. So good morning, everybody. I guess from all over the world. I'm here in sunny San Diego. And in fact, I just had checked Surfline. So after I give this brief, I'll be heading out. It's fair to good across the board. We had a swell hit last night. So life is good. It's great. And boy, I'm really thankful for John and his team putting this together. The timing is pretty good, wouldn't you say? We've got some very interesting things going on in the market for sure. So what I'm going to do today is but there's so many different ways we could go from the perspective of what can help us all manage risk in this current market. And as I was thinking what would be the most germane, especially in this environment, I put together a set of slides that's a really simple concept, but at the same time it's a very powerful concept, and quite frankly I think it's one of my most important tools. And so that's what we'll talk about today. Every time I give a brief, what I like to do is put a little quote in the bottom that has, and it's not, I'm not trying to be religious or anything, but when we talk about this concept of the measured move, basically it's all about that quote, right? What has been will be again. What has been done will be done again. There's nothing new under the sun. That's human nature. That's us. And so we're going to focus in on the measured move, and we'll see why that's such a powerful tool. Obviously, this is for educational and informational purposes only. We're not guaranteeing anything. In fact, as I start my briefs, what I always like to say is, I'm just here to help everybody manage risk, including myself. So we're not guaranteeing anything. But what we can say is these are very powerful techniques. A little bit about my background first, then we'll go into a lot of examples of this measured move concept. And then we'll just wrap it up, see if anybody has any questions. All right. That's me. I have my own nonprofit for veterans. We take them down to Punta Mita, Mexico, and teach them how to surf. It's a game changer for me. I love the waves, maybe because I love the waves in the market. But boy, I have a great time in life, and it's really good. As John said, I am a CMT. I was the former educational director at the Market Technicians Association. And also at one time, I was a CMTI level 3 instructor. Most of that was around intermarket analysis, Elliott wave theory, and then just a little bit more of more of a theory for CMTI level 3. A lot of it was Elliott wave because people weren't familiar with it. But yeah, I'm a CMT and I enjoyed it. And anyone who loves charts, I recommend you go through the process. It really helped tone my skill sets, the CMT. And the Market Technicians Association is doing great work. I was a CTA with my specialty in spot foreign currency, the FX market. So if anybody wants to talk that, I can do that all day. I love to blog. I have my own blogger on StockTwits. I got about 40,000 followers. And my focus is I'm all into harmonics and geometry, basically pattern recognition in the marketplace. In business, as John said, I did get to spend some time in a Tomcat for about 11 years. I graduated Top Gun, which was the pinnacle of my career. Can talk about that all day long. I did fall asleep in the best movie in the world, I guess, right now. I guess been there, done that in a lot of ways, but I always fall asleep in movies. I am an entrepreneur. I've had a lot of exits. I've also had a lot of others. So can talk about managing risk that perspective. I'm involved with Wiz on I know he'll talk about it, but Matt Buckley with a documentary called No Fallen Heroes. And it's about plant-based medicines and the power that they have in healing a lot of operators. It's going to be a powerful documentary. And then I have my sup vets, and we take about 10, 15 vets down to Punta Mita twice a year. It's a blast. So that's me in a nutshell. Let's keep rolling. So I think there's a lot of us here, and we all are looking for the holy grail. I mean, everybody is, right? You're always trying to find an edge. You're trying to make your edge as good as it can be. And then you get to a point where you're like, gosh, I don't need to read anything else. So from a theory perspective, I've read all these books, right? And more. And for me, I was driven to understand that the market pivots at a number for a reason. I believe that. I still believe it. And I dove, right? I dove into the why. I also dove into a lot of the technical analysis books out there, right? This is Connie Brown's latest one, the 30-second jewel. I'm not kidding. I think it's 8 inches thick. Sorry, I'm going to take a good sip of my coffee. This thing is a beast, but it's amazing, right? So, and then, Fibonacci Ratios and Pattern Recognition by my friend and mentor, Larry. Great book, right? It's really all you need. Then you go into Michael Jenkins and we've trained together, and he's an unbelievable individual. He's taught me so much. I first started out with my fib stuff. I went and did some, training with Joe DiNapoli. Joe DiNapoli, great guy down in Tampa Bay. And then, there's just so many books out there, right? And what happens is we go through all of this and we just keep looking for that next indicator or that next technique. And I'm here to tell you folks, what we really need to work on is what's these 2 books. It's about the mindset, right? My favorite book is Trading in the Zone, right? Every market moment is unique, right? And then the power of this statement is the best. Define your edge and trust it, right? And so I've become a pattern recognition trader. That's my edge and I trust it. But what do I really do when I first step up and sit down to take a look at a chart and what it's telling me? Folks, it's going to sound crazy. After I've done all that, I look at measured moves in price and measured moves in time. That's it. As I start to sit down and do an analysis of a chart, where are my measured moves? Once I figure out where the measured moves are, I can build a game plan. When the market is moving as volatile as it is right now, and for me, that maybe I'll help present this material, and it'll start becoming for you out there in the world. It's kind of cool to think about that, John, out there in the world. I sit here in my little house in San Diego, but it's the most powerful tool you can use, because this human nature, it never changes, folks, right? Go back to the first quote that was on the slide. What's happened is going to happen again. And in these really trending volatile markets, go out onto a longer term chart and look at your monthly and weeklies, and you'll see the power of these measured moves. Then you can start rolling in your indicators, your oscillators, your moving averages, your Bollinger Bands. Gosh, Ichimoku clouds. I mean, there's thousands of indicators, right? But what you really want to do is clear all that off when you first sit down and take a look at the measured moves. So I just randomly picked the New Zealand dollar versus the United States dollar, or the Kiwi versus the dollar. And as we show up, here's a chart. It's a monthly chart. Okay, got a monthly chart right here. Here's the New Zealand dollar versus the United States dollar. And it goes all the way back to Bretton Woods, 1972. So when you look at that, you're probably going, okay, so what, right? Does it look any better than anything else you've seen? Are there anything, that makes it stand out? Well, if you really start thinking about looking through measured moves, what you find, in fact, yes, right? And so let's draw our attention to these measured moves right here. Sorry about that, just trying to draw. These measured moves right here, right? Boom. Exact same move, copy paste. Oops, sorry, I got ahead of myself. Exact same move, copy paste, right? These measured moves are everywhere. Now, how harmonic is the market? Well, I took that measured move, I took it over here, and I just took it from the all-time high in the Kiwi versus the dollar, and I measured it, okay? Here's the square root of 3, 1.732 times that support, and here's 3.142 times it, right? So what happens is these measured moves are everywhere. And I imagine if we did the work, we could find some harmonic to this and some harmonic to this. In fact, it kind of looks like it's almost the same here. So these are where the pivots occur, folks, out on these monthly and weekly measured moves, okay? Now, the other thing, just gonna stretch your mind a little bit, okay? The other thing is the way we look at the market, okay? Price and time are the same thing. It's a Gann theory. Good coffee. But what we have to realize is this price and time, they're the same thing. So if we have a price movement, we're going to have a subsequent time movement that's equal to that. See that? Here's our price, moves up and down. Here's our time, moves left and right. Okay, prove it to me. All right. So here's this price movement, vertical price movement, converted into horizontal time movement. Now, folks, remember, I'm not doing anything else but measured moves out on this monthly chart. There's no astrology. There's no numerology. There's no Gann square of 9. There's no oscillators. There's no Elliott wave counts. I mean, thousands and thousands and thousands of techniques. That's why I wanted to show us all. And no matter what you do, whether you're a fundamentalist trader, whether you're a technical trader, measured moves are key. So all we did was we just moved this time component horizontally from that low, time component low, from that low, time component low, from that low, time component low, from this low, time component low. We could take this time component and slice it into 50% or 0.618%, and this is going to be the harmonic aspects of the market. This is it, folks. It's one single line that goes up and down, and then you convert it to time. Measured moves are our friends. So let's go over some more examples. How about crude oil? Here's crude oil. Now note, we're in log scale, okay? So what happens, log scale is percentage movements, right? And what we want to think about from that is when you look at a chart, see how right here on the right side, the price, it gets all spread out and jumbled and everything, it's percentage moves. So if you're ever wondering whether this person's using a log chart or a regular analog chart, a regular chart, just look at the scale, okay? And so these are percentage moves in crude oil. Measured move down, same. Measured move up, see the measured move right here, same. measured move down, same, measured move down, same. So my biggest problem is I've been doing this for a while is I got to get a trade a day. I got to get a trade a day. And what I found was wait, right? If I wait, I'm going to have wonderful opportunities. And so do you want to wait and be around here? Or do you want to try to short, right? It's just a style. Okay. Well, how about time? Okay. Again, this is crude oil. Time from this high to this low, bam. From this high to this low, bam. From this low to here, bam. See this? So it's not exact, but it's close. And again, remember, all we're doing is we're starting with what? We're just starting with this measured move. That's all it is. And so these measured moves are everywhere, folks. And they do work on lower time frames, but because the market's fractal, remember, but a 60-minute measured move is going to get slammed if a monthly measured move doesn't work. You see what I'm saying? So if you want to find where the potential real inflection points are, another coffee swig, you've got to go out to a longer term time frame. Those are where the real pivots will occur. All right. So we'll take a look at the VIX. Here's another one. So here's the VIX hourly. And this is a while back, but the bottom line is we've got a 60-minute chart. We got the VIX. Here's our measured move down. Market moves up. Here's that same measured move, copy pasted. Here's that measured move down. Market goes up. Same measured move pasted, right? It's all about the measured moves. There's no oscillators. There's no moving averages. There's nothing, right? Now, if you're comfortable using these oscillators, and why wouldn't you be? Because we all use them. Take everything off the chart first, find the measured move, and then start overlaying some moving averages. Then start overlaying, let's say, a 14-period RSI looking for bullish divergence, standard deviation. You see where I'm going with it? Overlay as many indicators as you want, but do yourself a favor, look for the measured moves first. Why? Well, you can see that the market went down, up, down, and pivoted, and it started selling off. So here's that measured move we talked about. Copy, paste. Here's that measured move. Well, had it happened before? Well, of course, if you go back, copy, paste. It does the same thing all the time. From a timing perspective, again, all we do is we roll this blue measured move in the vertical horizontally, high, low, high, low, low, high, high, low. Think about all the money we spent taking courses. Think about all the reading we've done. Think about everything. I'm not sure, how to tell you this, but this vertical blue line has all of that right here, all of that incorporated into it. Okay. There's footprints left by the market, and the market leaves these footprints, and all we have to do is spend our time finding those footprints. And then we have a clue of how to manage risk. That's it. People ask me, Bart, how often are you right? And I tell people, I go, I'm right 100% of the time. And, they give me that look, you can't be right 100% of the time. I go, yeah, I can. I'm right 100% of the time because I know exactly where I'm wrong. I don't know if the market's going to pivot here. No idea, right? But what I know is after this type of measured move, it certainly pivoted in the past. So I'm trying to get probability on my side by using these measured moves. So the probability is that it should, but it doesn't have to. It doesn't have to do a darn thing, right? Mark Douglas's book, Trading in the Zone, teaches you that. But if I wait to enter here, then at least I know I've given myself the best probability. And then using just rudimentary timing, all we're doing is we're moving this vertical line to the horizontal, right? I can figure out, okay, I might have a time component coming in that I might be interested in. Measured moves are very, very powerful. Let's go through some more examples. Here's the XIV, and I wanted to do this to really just kind of highlight, with the highlighter, highlight the measured moves on a log scale. You can see over here, right? Here's how you know it's a log scale. So what happens? Back in 2011, late 2011, the XIV, inverse fixed, rose 857.60%. So when we are doing projections, here comes another move going up. We want to do 0.618, that projection, equality, like projection equals projection, and then 1.618 times that projection. Well, here we take 857.6. We multiply it by 0.618, we get 530%. Did a quick drawing. Here's basically 530%. There's a target zone. Target zone coming into polarity, right? Coming into these trend lines. What happened? Bam, we had a big sell-off. Well, what really happened? Well, let's do, here's our vector component A to B, 859.87%. Here's another vector component of 859%. Boom, bam, that in fact was the high. Market just sold off and ripped viciously. Did I know that was going to happen? Absolutely not. I just wanted to show you that this is a great example to show the power of these measured moves on both a price component, right, on a standard chart, and also on a log chart. They work both ways. Now, the one thing you need to understand when you're using logarithmic charts, the rolling of the chart horizontally, right, the rolling of the measured move horizontally will not work on a log chart because you have expanded, or excuse me, you have contracted, you see, you've contracted and expanded the time component. And so you can't depend, for lack of a better word, you can't depend on your timing component only when you're using logarithmic charts. And that's because it's not a pure price equals time. We have some percentages that we have to take advantage of. But again, you want to be out there and you want to know where these levels are. Again, this was a weekly that gave us a heads up on this, okay? Are there any questions so far? I'm just cruising through. This is great, okay? Well, let's, how about what have you done for me lately? Dow Jones Industrial Average, right? So what I do for Top Gun Options is I'm basically the chief technician, and I provide all our different options players basically inflection points that they could be looking at making some risk controlled moves in this current market. And so this is, and I post them on a chart database, and depending on your level of service, you have access to it. But here's Dow Jones Industrial Average, right? Well, as the market was rallying, what did it do? It did measured move up, measured move up, measured move up. Why not, right? Oh, by the way, right on a 382 retracement. Let's see what happens. I think the market might have gone down. This is before the latest sell-off, right? I was like, hey, if you're looking at shorten, this is probably a good time. Where could it go? Well, look at this. This is our 2020 move down. Pretty big C wave there. But anyway, so copy, paste, bam. So now we do a retracement grid from this April low up to this high. We have a 0.618 retracement. But more importantly, what? We have this measured move. Not a bad target zone. Seems pretty far away, but have another day like yesterday, it might not be. But again, this is the measured move, right? If you want to take your thumb and forefinger and roll it horizontally and put it and place it right here, roughly, it looks like you'll get into about this area here. So you knew that there was a potential time component coming in as we're getting ready for it, and that's the Dow Jones. See how we use that? So how did it work, right? Well, this is now a 4-hour chart of the Dow Jones Industrial Average. I'm not sure what happened here, all these AAAs, but it is the Dow Jones. You can see right here. I must have had my finger on the keyboard or something. But as the market was cruising down, right, here's all we did, right? We rallied. Here's the first rally after the all-time high. Copy, paste, bam. Copy, paste, bam. We've got bots. We've got high-frequency traders. We've got hedge funds, institutions throwing around, in the case of the currency market, yards, right, of positions. I mean, we've got a lot going on. We have thousands of indicators. Take all that off, look for the measured moves. It works, it helps, right? Now, what do? We take this vertical movement, roll it horizontally, and now we have our time component. Boom, 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 boom. Time. Sell-off occurs. I don't know, maybe we're coming into a low, right? So as you see that you could have a time component coming in, that's when you throw on all your other type of indicators or moving averages, or maybe you're fundamentalist and you start looking for more ideas that this market's way oversold and you're looking to buy the bounce, right? Either way, we're just giving ourselves a heads up, right? But it helps you understand the market dynamics that are going on. So again, think of all the people who are trading the Dow Jones Industrial Average. Think of all the talking heads, right? And I think they do a fine job. I'm just saying their job is to get people to listen to them, so they talk all day long. But how often do you hear, hey, it's about to finish a measured move? So if it's trending in that direction, then air quote, it should, right? It should respect it. Well, it certainly did, and it's respected it every time. So next time there's a sell-off and we start to get a rally, I'm putting my blue arrow up there, right? And if it's not this blue arrow, then it'll be some harmonic of that blue arrow. 1.618 blue arrow, 2.0. But we know that this is a valid measured move that's running all the corrections. In fact, it's what? It's the harmonic aspect of it, right? Stefan just asked a question, is this applicable to crypto too? Absolutely, Stefan. It's applicable to everything. Anything that's a liquid tradable security, measured moves work. Number one, because of the quote, right? It's the same concept on fixed income. It's the same income. It's the same concept on commodities. It's the same concept on currencies, and especially equities. It'll work on anything. It's the measure move, right? The same people who are trading crypto are the same people trading the crypto, are the same people trading the equities, are the same. It's all the same. Okay, so that's a good question. It is applicable across, quite frankly, across anything. Okay, let's keep rolling. Set you guys up. Well, so here's a real-time example, and it's for Facebook. It's for Meta, and let's go ahead and roll through. Okay, so excuse me. The first thing we do is let's orient ourselves. We're on Meta, Facebook. I'm going to call it Facebook, but we're on Facebook weekly. I put monthly log. I'm wrong, but longer term. But you can tell we're on a log scale right here. Okay, so here's the largest percentage, right? If you take Meta and you go to this weekly or monthly and you're on a normal scaling chart, you won't see this move. You have to go to log. Once you go to log, now you see this big corrective percentage move. Copy, paste. So the reason I wanted to put this in here is I went back, I actually sent out a alert to our to our subscribers yesterday. And this was a while ago, right, folks? We've had this level determined since like March. Now, it doesn't help you in here, right? But what's your time frame? What's your style? Me, I'm a more long-term positional swing trader. Like I've been long TBT for months. I've been long UNG for months. I've been long DBA for months. I also have a position in MJ, which is a loser. I'm a big believer, mostly for the vets, the power of plant-based medicines, cannabis, and psychedelics. And so on a wing and a prayer, I thought, oh, this is going to work. Well, that's the only position right now I have that's underwater, and it's not performing that well. But I'm holding this thing for years. I don't care. So so my style is I'd much rather in here. This is kind of chaos to me. This is actually, John, this is like a dogfight. I never liked dogfighting. It's complete insanity. You never know where the next person's coming. He or she could be right underneath you the whole time. It's crazy, right? It's like day trading on a 1-minute chart. Me, I'd much rather have a 150-mile setup coming in from the carrier in the Arabian Gulf, and you got time to build it. That's my style. That's my style of investing. So I'm much more of a longer term positional, but this will work on the intraday. It works on any time frame, right? So copy paste. So now we have this area here that we're interested in. Now note, these log term trend lines I actually give a course to. It's only 197 bucks, folks. It's 6 courses. They're about an hour long, and it goes over all these techniques. But we talk on the first training module, we talk about the power of trend lines, especially in long-term logarithms. So once this trend line is broken from this all-time low, that's duh, but that's your first true technical indication that this trend is broken, right? And then what's it do? It comes down, give me a little something, breathes a little bit, kisses it, and it's gone, right? That's why this is such a powerful chart here. So let's cruise on down the line. So here's Meta. This is real time. I did this yesterday, getting ready for our brief. So we're Meta monthly, and you can tell we're on a log scale. Here's that IPO. Oh, kind of got slammed and then off we go, right? So here's the IPO. It's about a 60%, 61%. I am kind of a numbers guy. So I was actually trying to make that work out to 61.8%, but it didn't. I'm like, all right, stop. This is ridiculous. It's time to go watch the basketball game. But anyway, copy, paste, bam, here we are. So we're getting close, right? And it's either going to work or not. Don't know if it is. But let's look at what we have going on in this month. So this RSI, 14-period RSI, is the lowest level ever. Definitely oversold. Thank you for that, Mr. Genius. But on a monthly, we've broken RSI support. We know Facebook's really in a mess, but might be an opportunity for a risk-controlled buy, right? Based on nothing more than measured moves. I don't know what Facebook's fundamentals are. In fact, I've never even taken a business class. I'm just a pure chartist, and all the fundamentals, bless you, he and she out there that are doing it. I'm just not smart enough to. I'd rather just play with crayons and draw stuff. So, but what's very interesting on this monthly is from the all-time low, it's right at a 0.618 retracement from the all-time low with this measured move, right? So what are we doing? We're building a case for entry. A case for what? A risk-controlled entry. So now what do we do? This is what we teach in our course. We go monthly, weekly, daily, 4-hour, 2-hour, hourly. You just got to do it every time. So now what happens? Okay, here's our measured move. Here's our measured move. The only thing that's changed is we've gone down a time frame to a weekly. But what are we getting these numbers here from? Well, the other thing we teach is extensions are very, very important. And what we're doing is we're extending off this last move up into the high. That's always a key segment. And that's a 1.618 extension that does what? Lands right on the 0.618 retracement. Lands right on the largest corrective move percentage-wise. I like it. The 127, folks, I'll get geeky on you. That's the square root of 1.618. Just leave it at that. Square roots, the inverse of the square roots have to do with music. We'll leave it at that. But the bottom line is this move here, this is a 1.27 extension. So now I have 3 ratios and a measured move. Come down here to CMTI 2, level 2. On a weekly, we have bullish divergence. What's that mean? The market keeps going lower, but the oscillator is not confirming it. The oscillator is moving higher. Bullish divergence. All right, what else could we possibly have? You might ask yourself. Hope you guys are having fun. Now we move down to a daily. Okay, here's the 0.618 from the all-time low. Here's the 1.618 extension. Here's where we did the 1.27 extension. 3 ratios. Whoa, let's look at this. This right here, 3 drives to a bottom. Measured move into that same area. Interesting. I'm very interested. What do we also have on the daily? Bullish divergence. Folks, we're setting up at about 158-ish for an opportunity to buy Facebook. I would get out, run for the hills below this measured move because I don't know if it's going to work, but boy, can you see how this measured move is helping us to drive a potential inflection point. Note, all caps, bolded, italicized, and underlined, potential. It could blow right through. If it does, everything's going to be selling out for even more. And why not? Look at this. It's straight down into this level. So instead of just jumping in front of the train, maybe wait a day or two and get the first pullback, right? That's where strategy comes into play. And boy, this gap here, pretty monstrous. I'm going to call that the wall of China resistance, which gives us what? Which gives us a good target to shoot for. So we're still on a daily. We haven't even gone intraday. But can you see how we're driving to a really, really potentially powerful inflection point, all driven by measured move? So now we're going all the way into a 120-minute or 2-hour intraday, non-log. See how the scaling is the same? So let's orient ourselves. Here's the 0.618 retracement. This is also the 1.27 extension we showed. It's also the 1.618 extension we showed. Here's our 3 drives to the bottom: drive 1, drive 2, drive 3. More importantly, I call them nested patterns within a pattern. We have what's called a butterfly buy pattern. There's your butterfly. Those are your blue triangles, right? So now that goes a little bit lower, but what's it go to? Right to the measured move area. And that looks like it's down at about 100, I don't know, probably 52. So this 150s area is going to be really, really, really huge for, I would say, the market, and also especially for Facebook. If we're going to find some support, remember it was FANG, right? It's not ANG. FANG, Facebook, was part of it. Facebook is getting slaughtered. So, folks, I don't know. Market's going to open in what? Probably already opened. So I don't even know if this market has been hit. It could gap below it and be gone. I don't know. But what I can tell you is I want to be looking for risk-controlled opportunities with a very tightly defined zone, I call them. LAR, launch acceptability region. I probably got that from my flying days. But this is where I want to be investing. My DBA position, you might not realize this, folks. I waited years for that. Okay, years for that. So just keep that in mind. What makes us Saad asked, what makes us choose mid-February top over early February top? I'm gonna have to go back to it. I'm not sure, to be honest with you, Saad. Is there a preferred tool on TradingView that allows you to rotate your vertical measured move line to the timeline? Asked Tyler. Great question, Tyler. I'm not sure with TradingView, but what you can do is I actually have a proportional divider, and I'll just measure it on the screen and then roll it horizontally. You can do that. If you have a arc tool, a circle tool, you can draw the vertical, and then that'll automatically create the circle that equals the radius. And then horizontally, you can use that. So there's multiple ways you can do it. My preferred tool, honestly, is I just use my proportional divider. So it's not exact, but it helps you get into the right zone. Okay. So anyway, that's where we are with Facebook, using these measured moves and developing a case for entry. Really powerful stuff. Okay. So that's really all I have for you today. I'd love for you guys to come on over, hit Wiz or I, Matt Buckley. He's going to be talking here soon. If you're interested, we could probably figure out a deal. But the bottom line is, when you go to Top Gun Options, this Zone 5 master charts is where I update upwards of about 20, 25 really liquid, if you will, charts for people who love to play options. We also take a look at all the equities, the VIX. I do a little bit of fixed income because it's important. And I'll throw in some ETFs and commodities, just like crude hit a major target 2 days ago. So, just stuff we're interested in, gasoline. My other position is I'm long the dollar versus the yen. So I'll throw some currency stuff in there because it's really important. But this is the Zone 5 charts, Tomcat charts right here. It's only $147 a month, peeps. I do a weekly market update on Friday mornings at 7 o'clock Pacific Standard Time. And then I'm sending out emails and text alerts on some potential setups. This Tomcat charts training, that's where it's only $197 for 6 one-hour courses. And we actually just finished that last month. I think it went really well. Excuse me. And then we have our Zone 5 master chart database. And that you get all the charts, you get the weekly update. You also get the 8 live training sessions. So you get these training sessions from Tomcat charts included. And then if you want to go all in, we give you 50% off if you want to go for a lifetime. So not a bad deal, if you ask me, folks. And then we do, obviously, some personalized coaching. People are interested in that. We just do that one-off, buy an hourly. or buy a package of ours or something. So we work with that, but it's a great little service, and I'm having a ball. So thank you. Let me know if there's any questions. I'll go to the chat room. Again, I'm Bart. Hit me at bart@topgunoptions.com. And then president and founder of Top Gun Options, Wiz, Matt Buckley, will be on also. And he is just pure energy, as I was talking to John earlier. So that's all I got, folks. I wanted to, thanks, Kate. I wanted to just make it easy, right? This is really, really powerful techniques. And boy, it works. And your measured move, it's kind of like the American Express. Don't leave home without it. So that's all we got. Yeah, Kate, I'll take a look at it. I'm not sure what's wrong with the link, but I'll make sure Wiz, I'll give Wiz a heads up before he talks. So John, Kate, that's all I got. I want everybody to be out there looking for their measured moves now all over the globe, because we're going to need them for sure. And hopefully everybody got something out of that. So John, Kate, anything, or doesn't look like we have any questions.
Yeah, we'll get John back here. And then also, just so everybody knows, we'll post replays next week. So if you do have a different link, James will make sure to include that so people can still.
Okay, great. Thank you. Awesome. All right, folks, that's it for me. Any questions, anything? Again, Bart@topgunoptions.com. Thank you for your time. John and Kate have put together an amazing set of speakers, and I know I'll be listening in also. I've always got stuff to learn. So Kate, I think we're good, right?
Yeah, sounds great. Thanks so much.
Awesome. Awesome. You bet. And thanks for having me on. Go get a cup of coffee, everybody. Okay. You're welcome, Ray. Thank you. Hopefully it helped. Thanks, Kate.
Thanks. Yes.
All right. Take care.